Hello there, I'm Erin. This is BoomBust, and here are some of the stories we're tracking for you today. First up, it was a historic day on Wall Street with the Dow topping 16,000 on Monday. We'll tell you why and what caused the run coming right up. And the revolving door of Washington to Wall Street takes another spin. This time it's Timothy Geithner in the turnstile. And finally, we have the one, the only American investor, author, and bow tie aficionado, Jim Rogers, live on today's show. You won't want to miss a moment, and it all starts right now. Kicking off the headlines this afternoon, a record-breaking day on Wall Street Monday. Now, the Dow Jones Industrial Average topped 16,000 points for the first time ever, while the S&P 500 briefly surpassed 1,800. The Nasdaq was also on the brink of a milestone. The tech-heavy index was nearing 4,000, levels not seen since September of 2000. The Dow is up more than 20% so far this year, while the S&P also climbed more than 25% in 2013. Now, experts say that the Fed's stimulative monetary policy is behind this year's roaring bull market. U.S. investors took their cue on Monday morning from the overseas markets. In Asia, stocks rallied after the Chinese government announced a broad outlook for economic reform, which included opening the financial sector, relaxing restrictions on investment, and improvements to the country's IPO system. Bitcoin, they even saw a dramatic increase on Monday as well, hitting $675 per coin by 1 p.m. Now, these are record numbers for the online currency, but however high it goes from here is anybody's guess. Elsewhere, the former U.S. Treasury Secretary Timothy Geithner announced he will join private equity firm Warburg Pincus as president and managing director. Now, Geithner, who stepped down as Treasury Secretary in January, will join the New York-based firm in March. The firm said in a statement, quote, Geithner will work closely with Warburg Pincus's top executives on overall firm strategy and management, investing and portfolio management, organizational and funding structure, and investor relations. Now, Geithner played a central role in the government's response to the 2008 financial crisis before becoming Treasury Secretary in 2009. Prior to that, he led the Federal Reserve Bank of New York for more than 5 years. And finally, the world's largest futures exchange, the CME Group, said that its clearing service for energy and other swaps was hacked back in July of this year, sparking a federal criminal investigation. Now, certain customers' information relating to the Chicago Mercantile Exchange's Clearport service, that was compromised. Now, Clearport, that handles contracts mainly tied to energy. However, there is no evidence that trades on the Merck's electronic system were adversely impacted or that any other clearing services were disrupted. Clearport handles nearly 500,000 contracts, million, not billion, 500,000 contracts a day. Well, there you have it. We'll be tracking these stories and keeping you posted on all the latest. In the past few years, the demand for corn and soybeans, paired with historic droughts and bad weather, drove crop prices to new highs. And so, no surprise, farmland values, they rose rapidly with them. However, this year, due to expectations for a record corn crop, corn prices have fallen nearly 40%. And surveys from 3 of the Federal Reserve Bank show expectations of an easing of farmland values. For more on agriculture, commodities, and the overall markets, we turn to Jim Rogers, investor and author of the book Street Smarts. Jim, thank you so much for joining us today.
I'm delighted to be here, Erin.
Now, you're very bullish right now on agriculture. What are you seeing in the markets today that leads you to this position?
Oh, Erin, the world has consumed more than it's produced for the last decade, which means, of course, that inventories are near historic lows. We have low inventories, which is bad, but then worse than that, Erin, we're running out of farmers. The average age of farmers in America is 58. In Japan, it's 66. In Canada, it's the oldest in recorded history. I could go, and no young people are going into agriculture. Erin, more people in America study public relations than study agriculture. So we have low inventories, we're running out of farmers, the world's facing a crisis.
And it sounds like America just doesn't need that many public relations experts, from what you're saying. Now, I want to move on to my next question.
Well, I don't know.
You don't know. We'll find out. Now, specifically, what commodities are you long today? I understand that you feel very strongly about sugar. Can you explain why? Why sugar?
Well, I'm long sugar. Yes, that doesn't mean it's going to go up. One simple fact is that sugar's down 75% from its all-time high. Erin, I don't know if you know many things that are down 75% from their high. By the way, the high was in 1974. That means that sugar is down 75% over the last 37 years. I suspect it's a good buy. It may not be. It could go lower, of course. But because of that, production's going down, consumption continues to go up. In Asia, as they get richer, and all over the world, as they get richer and richer, they like sweets. Everybody likes sweets.
Now, what should investors watch for today, in your opinion?
In what? Well, the main thing you need to watch for is what's happening with central banks, because, Erin, for the first time in recorded history, we have all major central banks and all governments around the world printing huge amounts of money. This has never happened in world history, and so the world is floating on an artificial ocean, an artificial lake of lots of printed money. Now, while it's going on, everybody's very happy. We're all having a wonderful time. At least the people who are getting it are, and their friends. But Erin, when that lake starts drying up, you better be very worried and very careful, because it's going to dry up, and a lot of us are going to dry up too.
Now, I definitely want to get to the Fed in a little while with you, and I'm gonna talk to you about that. But first, the price of gold, that's been down recently, and it's been hovering below $1,300. Would you, or are you, buying gold at these prices?
No, I would not buy gold, Erin. I think there's going to be a better chance to buy gold later. I own gold. I'm not selling. I have not sold, and am not selling any of my gold. I have hedged some of my gold. But no, I still own gold. But there'll be a better chance. I think there'll be a better chance to buy. Erin, the Indians, who are the largest buyers of gold, have been the largest buyers of gold in the world. Indian politicians are doing their best to stop Indians from buying gold. They've been fairly successful in the last few months. But Erin, worse than that, the Indians are now trying to make the Indian politicians are now trying to make the Indians sell their gold. Many of the Indian temples over the past few centuries have built up huge stockpiles of gold. Now the politicians want them to sell it. If those Indian temples start selling gold, who knows how low it'll go. So I'm not buying, I'm watching.
Now, Jim, we had James Rickards. He was on the show last week, and he had some interesting things to say about gold, specifically the implementation of the gold standard. Now, I want to play this clip for you. Check this out.
When countries went back to the gold standard after World War I, they committed a major blunder, particularly England. Winston Churchill was Chancellor of the Exchequer at the time. They went back at the old price, which meant you had to reduce the money supply. That contributed to the Great Depression. So the key to a gold...
Now, Jim, do you think trying a gold standard 2.0 is a realistic alternative to our current fiat system?
People have tried the gold standard many times. It has always, in the end, been abused by politicians. They cheat the public. They start cutting back on it. They abandon the gold standard. It might work for a while, but, Erin, nothing has ever lasted forever. So we can try the gold standard. It won't work. It's never worked before for any long period of time. It won't work again. The only system that will work is let people have a free choice in money, which is what people have had most of the time throughout the last few thousand years. But sure, we may try the gold standard because we'll be desperate within the next decade as things get really bad. People are going to be desperate to try something else. Maybe it'll be bitcoins. I don't know what it'll be.
I love that. That leads me to my next question. Perfect. Bitcoins. I wanted to ask you, do you see these decentralized kind of cryptocurrencies like Bitcoin as a realistic alternative to our current monetary system?
Erin, I'm sorry I don't understand Bitcoin. I've never really tried to figure it out or get into it. Every time somebody brings it up, I just sort of lose interest before it goes very far, so I don't know enough about it. There are many more important things going on. I mean, what happened in China last week is a lot more important than Bitcoins, so I don't pay too much attention.
Now, speaking of China last week, now Chinese officials, they unveiled a blueprint for economic reforms, and in this blueprint, now I want to make sure this is right, the document stated that markets would play a decisive role in the allocation of resources such as oil, gas, and water. What does this mean for the Chinese economy?
Well, it means that the Chinese are becoming more and more capitalist. It was very interesting. They said that the markets will be the final arbiter, not the bureaucrats, not the government, or anything else. In America, Erin, it's exactly the opposite. The government says when there's a problem, we'll decide, we'll do it. Look at Obamacare. You know, the government says we will figure out the solution. In China, they say, no, we'll let the free market, the open market decide. I much prefer the Chinese system of open markets than ours with the government dictating everything.
Now, you have this famous quote, and I'm sorry, I'm going to kind of misquote you here, but it's you said that at the beginning of the 21st century, you'd want to live in America. Today, you want to live in Asia. It kind of sounds like you're echoing that now, no?
Yeah, I said at the beginning of the 20th century, you'd want to live in America. At the beginning of the 21st century, one should live in Asia. Yeah, I moved to Asia. I live in Asia. My children speak Mandarin because I'm trying to prepare them for what I see as the 21st century.
Do you see Singapore, where you happen to live, and I have a fondness for as well, having lived there myself, what do you think of Singapore relative to the rest of the Western world?
Well, Singapore is not really the Western world. It's about as Asian as you can get. It's certainly a very developed country. It's an astonishing success story over the past 40 years. You know, everything works. It's got great health care, great education. I mean, I'm extremely happy living in Singapore. My kids love it. My wife loves it. We're keen on Singapore.
Now, Jim, we have to take a quick break, but don't go anywhere, because coming right up, we're going to have Jim Rogers sticking around with us. And also, when you come back, WWJRD, what would Jim Rogers do? We'll follow up with the legendary investor and get his take on what he'd do if put in charge of the Fed. Ooh, should be pretty exciting. Also, foreclosures are up from September. In some cities, 1 in every 300 homes received a foreclosure filing last month. Is yours on the list? Rachel Kurzius and I discussing today's big deal. But as we head to break, here's a quick look at some of today's closing numbers. Stick around.
All people are interesting. Everybody has something to say. Everybody has a story. I'm not the kind of person you want to sit next to on an airplane. I'm interested always in the whys and the hows. And that's whether it's a ballet dancer, a ball player, or a president. Things that are curious to me, they're just things I think about. You never run out of questions.
It was a terrible mistake, and we're working very hard to make up for it.
And once again, we put something on the air. It's a flat-out lie.
Have you ever had sex with Governor Rick Perry?
No, wait. Do not answer that.
I want you to watch what we're about to do, because you've never seen anything like this on television.
back with more now from Jim Rogers. Now, we've been talking about commodities and Bitcoin, not for long, but the conversation wouldn't be complete without a little Rogers insight into the Fed, which we touched on before, but we're going to hit up again. Now, Jim, you're critical of the Federal Reserve and what they're doing today with quantitative easing. What alternatives would you suggest to the U.S. in order to get us out of this precarious economic position the U.S. has found itself in today?
Erin, it's pretty simple. The way the world has worked for a few thousand years is when people get into trouble, they fail, competent people come along, reorganize the assets, and start over. In America and the West, what they said was, no, we're going to let incompetent people take over the assets from the competent people and then let them compete with the competent people with their assets. This is not going. The Japanese tried this in the early 90s. The Japanese had 2 decades, 2 lost decades. It's not going to work. In Scandinavia in the early 90s, they let people go bankrupt. They had a horrible 2 or 3 years, but since then, they've grown dramatically over the past 15 or 20 years. The way the system works is when you fail, and you start over. In America, we don't do that anymore, and we're kicking the can down the road is the way it's referred to now. And when the can goes over the side, we're all going to go with it.
So basically what you're saying is that America hasn't taken its medicine yet, and because of that, we're really going to get sick.
You're exactly right. We're just making the situation worse. The debt is going higher and higher and higher. The money printing is going higher and higher and higher. Erin, we've had 50 or 60 years of excess in America. You got to pay the price someday, whether you like it or not. And the longer you delay the day of reckoning, the worse the day of reckoning is going to be. This is not going to be fun, Erin. I'm not happy about it. I wish you weren't happy about it.
Oh,
I wish the Federal Reserve and Washington. I wish Washington wasn't happy about it.
I mean, I don't think many are. And you've been quoted as saying that Janet Yellen is a, quote, lapdog for the establishment. Now, Jim, Janet Yellen, she called in sick. You're put in charge of the Federal Reserve for the next year. What would you do differently?
I would abolish the Federal Reserve, and then I would resign.
Okay, that's a very, we got the whole answer. How would you go about doing that, implementing that abolition?
Well, it's pretty simple. I mean, just close it down. The world has gotten along quite famously and well without central banks for most of world history. America's had 3 central banks in our history. The first 2 disappeared, Erin. This one's going to disappear, too, because they keep taking on huge amounts of debt. They keep leveraging up the balance sheet. They keep making mistake after mistake. They're printing money. This one's going to self-destruct before it's over, unless the politicians say, you know, this thing is a mistake. It's out of control. Let's get rid of it. It's more likely, though, that it will self-destruct.
Like you said, you don't see that happening. You see destruction.
Yeah, no. If I were, as I said, what I would do is just close it down now before we have a disaster. We already have a disaster. I would close it down now.
Now,
Erin, countries without central banks can have problems, too. Don't get me wrong. It's just that this central bank is going to make our problems worse in the end. We'd be better off with no central bank than this central bank, even with the problems of no central bank.
Okay. Now, the Dow, that exceeded 16,000 Monday, and these are historic levels. Are we headed for another crash? And if so, what's going to trigger it? There's a lot of factors. What do you think?
Well, we're certainly going to have a crash someday. This is going on, all this artificial sea of liquidity, which I mentioned earlier. No, eventually we've always had crashes throughout history. Every country in the world has periodic crashes. Don't think they've disappeared. I don't know. I don't have a clue when it's going to happen. You should watch RTTV. They can tell you when the crash is coming. I cannot.
No predictions.
Well, Erin, as long as they keep printing, right now we have all these people printing so much money. So I cannot see a crash anytime soon. I can see corrections. I can see the market going down a bit and for a while. But with all the money printing everywhere in the world, and there are no constraints on Congress now. Congress is free to spend as much money as it wants to. They removed the debt ceiling. They're afraid to do anything about it. So with all the money printing and all the spending everywhere in the world, this could go on for a while.
Can we print forever? Is that just an alternative? Potentially just printing forever?
That's what they're going to try to do. And Erin, when they eventually say we're going to cut back now, the markets are going to go down fairly substantially. It's going to scare the bureaucrats because, you know, these are people who are just government employees. They're going to be scared to death. And so they're going to start printing again until, Erin, until finally the market just says, we're not going to take this garbage paper anymore. We don't like this game anymore. We're going to do it. And then the market is going to force these guys to stop. And that's going to be called a crisis. That's going to be called at least a semi-crisis, but more likely a crisis.
Now, I want to revisit what we were talking about before the break on China. Now, China, they have some liquidity issues as well right now. I want to ask you, what do you see as the future for economic growth in China?
Well, in my view, China is going to be the most important country in the 21st century. But, Erin, that does not mean there won't be periodic problems in China. In America in the 19th century, as we were growing to power and glory, we had 15 depressions with a D. We had a horrible civil war. There was very little rule of law. You know, you could buy and sell Congress. You can still buy and sell congressmen in America. But in the 19th century, they were cheap. I mean, there were periodic massacres in the streets. America was a mess, but still, we became the most successful country in the 20th century. China will have plenty of problems. I don't know what or when or why or how, but I know they're coming. That's the way the world works.
Now, isn't the Chinese economy intrinsically just tied to the health of the American economy?
Well, of course, America's the largest economy in the world. Europe as a whole is an even bigger economy. Japan is bigger. But so when you put America, Europe, and Japan together, of course, if they have problems, China's going to have problems. China's one-tenth the size of those economies. So no matter how good a job they do, they're going to be affected by what's happening in the rest of the world. They can't help it.
Now, Jim, your new book out earlier this year, Street Smarts, it's your 6th book. What was your motivation for writing this one?
My publisher kept saying, listen, why don't you pull it all together? You've had these various books, but why don't you pull together how you came from the backwoods of Alabama to live in Singapore with 2 little girls who speak perfect Mandarin? There's got to be a lot that happened in the meantime. Why don't you tell it and the lessons that you've learned? I said, I'll throw in the lessons that I've learned, the mistakes I've made, and maybe it's a good story. And to my astonishment, Erin, people keep telling me it's my best book. I'm amazed.
It's a pretty good story. We're a fan of it here. It's unique, to say the least.
Well, thank you.
Jim, thank you so much for your time. We really appreciate you coming on the show, and we hope to have you back very soon. That was prolific investor and author Jim Rogers. Time now for today's Big Deal. Big deal time now. Rachel Kurzius is joining me, the prolific RT producer, to talk about foreclosures. Now, I want to start off by giving some stats here. Now, according to Realty Track, 1 in every 978 homes received a foreclosure filing last month. The good news is this is down 28% from last year. However, the numbers don't look as pretty when you single out certain cities. Now, check this out. In Columbus, Ohio, 1 in every 397 homes received a foreclosure filing. In Las Vegas, that area, 1 in every 384 homes received a filing. And in the Miami area, 1 in every 264 homes, they also received a filing. Now, Rachel, it's been 5 years since the collapse. How much longer will high rates of foreclosure continue to go on like this?
Well, I'm of 2 minds on this one, Erin. The first is that if you look at the most recent report from the Mortgage Bankers Association, delinquency rates are actually down. They're the lowest they've ever been in 5 years. They're at 5.65% right now. So that's kind of a good indication of what people call shadow inventory, the homes that will soon become foreclosed on, kind of those shadows looming in the distance that will soon be emptying. So that's kind of a positive sign. On the other side, we're seeing that servicers, the people who are actually deciding whether people stay in their homes or not, they act as the middleman between investors and homeowners, still don't have their incentives aligned with either homeowners or investors, because these servicers actually get the most profit through the economy of scale. So even though they benefit the most from a foreclosure, investors and homeowners are both better off if for instance, they decide to have a principal reduction or some other kind of change in the loan, if they restructure the loan, both of those other parties are better off. The issue is that they're not talking directly to one another. So the FHFA is trying to realign servicer incentives, but it's really complicated stuff, and they're certainly having a difficult time of it.
Right, and I'm sure very few people know that it's the servicer. This is where the problems are really kind of
right. And I mean, in a sense, I almost feel bad for the servicers because they were never designed to be organizations that were actually consumer-based or consumer-faced. So they're kind of having a tough time of it too. They were used to stuffing envelopes with payments, and now they're fielding phone calls and looking at documents all the time that in many cases they're not even trained to look at.
Right. Now, this seems like kind of a basic question, but I really want to know your opinion. What are some of the effects that foreclosures have on communities outside of the stuff that we already know? You know, never good for a community. Look at Detroit, but other than the basics.
Right. So the thing is, the foreclosure isn't only bad for the homeowner and for the investor who has now lost out on an opportunity to get a loan for a longer period of time, right? Getting less payment over time is still better than getting no payment. But for instance, for neighbors of that foreclosed property, they're in really tough shape because their property value also goes down, making it more likely that they might get foreclosed on. It also lessens the tax base for an entire community because now you have people who aren't living in their homes anymore and therefore aren't paying taxes. So there are definitely huge issues going on for a lot of people. And, you know, if you looked at some of the states you were talking about, Florida and Nevada, those are sand states, right? Along with Arizona and California, they were hit hardest by the financial crisis and in particular by this housing crisis. And even though prices are rising in those states, even more, what a lot of people are saying is the rise of prices is just going to create another bubble and where this is actually becoming cyclical in a very alarming way.
Right. Now, the Mortgage Forgiveness Debt Relief Act. Yes, I got that right. Mortgage Forgiveness Debt Relief Act. That expires at the end of this year. What does this mean for underwater homeowners? How do they react to
this is alarming for underwater homeowners who are, say, looking for a principal reduction because generally, without this act in place, what happens is that any sort of debt forgiveness is taxed as income without this act in place. So that means if, for instance, on a short sale in a recourse state, that means that any sort of money that the bank is, let's say, forgiving for you, that would be principal reduction, anything like that, that gets taxed as income if this act isn't right, exactly. So even if you get, say, a principal reduction on your home, let's say $100,000, if you're taxed on that, that's going to be a big cut for you.
Thank you so much. You got to come back on and talk more, but we got to go now. That's all for now, but you can see all segments featured in today's show on YouTube at youtube.com/BoomBustRT. We love hearing from you, so check out our Facebook page, facebook.com/BoomBustRT. From all of us here at BoomBust, thanks for watching, and we'll see you next time.